Hi there, welcome to Kneppy Invest and welcome to July the 17th, 2024. Pretty good day on the markets, I must say, which leads on from a bit of a bullish run over the past week or so. In fact, the XGO is well above 8,000 right now, 8,074, really moving towards the top of the trading range. So I am getting a little bit more wary. So I'd say a lot of people are becoming a little bit more bullish because of what's happened in the SGO in the past week. But I'm becoming a little bit more wary because it is getting towards the top of the trading range. And a few companies, particularly some of the biggest companies on the ASX, are looking a little bit expensive, including Australia's biggest bank. But this particular video, it will not be focusing on CBA, but I am planning to do a standalone video on that company titled, "Is it time to buy CBA?" And the answer to that should have been made quite obvious by my previous statement that it's looking quite expensive. But a pretty good day on the Australian markets, and that was led not by the NASDAQ, which is only up 0.06%. The Dow Jones up 1.85%, S&P 500 up 0.64%. But again, the American markets were led by the Russell 2000 up 3.6%. There has been a noticeable rotation from the big tech companies into the small caps in the United States. And you can just see that by the Russell 2000 chart right here. It has absolutely exploded over the past 4 trading days. It's gone from 2,050 up to 2,250. So we're talking about a 10% increase in this particular indice in 4 days. Yes, 4 days. In fact, there was a tweet. I'll show that tweet in a second or so. But before we have a look at that tweet, what is the agenda for today's video? So obviously, we're going to look at this particular tweet, talking about the Russell 2000. I'm going to show you an email I received last night in regards to Wisetech and a lawsuit against Wisetech, which has me intrigued. We'll have a look at the top and the best and worst performing indices, sectors, and also companies. Also, we'll bring you the top 5 stocks of the day. I'm going to do things a little bit different. I won't talk about honorable mentions. I'll just mention some of the companies that did not make it, and I'll just focus completely on the top 5. Might have a look at a few charts, including SKS, because the share price of that company was quite volatile today. Droneshield still falling, so I might have a look at that company. And then I might have a look at a few of your comments. So let's start this particular video looking at this tweet in regards to the Russell 2000. I did bookmark it, the only tweet I've bookmarked, and that's why I bookmarked. Here it is. History was made today. Yes, we are talking about history made, well, not today, overnight, American time, well, our time, daytime, their time. The Russell 2000 closed 4.4 standard deviation above its 50-day moving average. And the whole reason why is because it's gone up 10% in 4 trading days. No other major US index, Dow since 1900, S&P 500 since 1928, and NASDAQ since 1971 has ever closed at that much of an extreme. Where were you when the Russell 2000 closed 4.4 standard deviations above its 50-day moving average? So they're probably trying to suggest right now that it's due for a little bit of a pullback, and that's understandable. Yeah, that's understandable. So don't get too excited right now about this rotation into small caps. And I would be surprised to see some of the companies within the Russell 2000 pull back a little bit. Now, I didn't take advantage, but one company in my portfolio went up almost 10%. That was Spotify. I think it's up 9%. And I had a look at a few other companies that rallied really hard overnight in the United States. I thought some of the tech non-profitable tech companies might have rallied, like Atlassian or Snowflake, but they didn't. It was like Shopify up 8%, like DKS, I think it's Dick's Sporting Goods up 5.1%. What else? Heaps of companies up 4 or 5%. A company called Chegg up 17.35%. Figs up 10.1%. It just goes on and on. Sabre up 8.6%. Not the saber from the TV show The Office. If there was a saber from Office, I'd probably buy it. Flywire Corporation, 7.4%. These are all small cap companies. RRGB, what's that? Red Robin Gourmet Burgers. In fact, I went into Red Robin Gourmet Burgers in Seattle, and I actually really liked it. The one burger I did try, up 7.4%. Yeah, so it just goes on and on. A lot of these smaller companies up a lot. And this is just the market saying, or the market sort of implying that there is going to be some interest rate cuts imminently. So that's why they are rotating into these small cap companies. But I just thought it would be the unprofitable companies, unprofitable tech companies that might have benefited from this, but not at this point. Anyway, so that's the sort of really interesting thing happening in the American markets right now. And as we go to this Wisetech email, this is really interesting. This is Wisetech shareholder class action. I must have been, no, Hot Copper VIP. I'm not sure why I'm Hot Copper VIP. I very rarely go to Hot Copper. Anyway, so Phil Finney McDonald's is investigating a class action against Wisetech on behalf of persons who acquired an interest in Wisetech and or entered into equity swaps in respect of Wisetech in the period 21st of August 2019 to the 18th of February 2020. This in regards to misleading or deceptive conduct by providing its financial year 20 earnings guidance on the 21st of August 2019 without reasonable grounds and by not withdrawing that guidance prior to 19th of February 2020. I reckon what's happening here is these people who are taking action against Wisetech sold out, and they are really pissed off now because if they sold out early 2020, particularly this is when the market was on a massive this is during the COVID-19 financial panic. 19th of February. Actually, no, that's they're talking about, and by not withdrawing that guidance prior to 19th of February. So 19th of February is when the market was having a complete, or started to having a complete hizzy fit. So I'm not sure if Wisetech would be to blame here. So let's have a look at the chart for Wisetech during this period. So 21st of August to the 19th of February. And I reckon these shareholders are just pissed off because they sold their shares in Wisetech because of what's happened to Wisetech shares after. And they're trying to blame someone else instead of themselves. That's what I think is happening. And I'm a firm believer you should take ownership of your decisions. Don't try to blame other people if one of your decisions goes pear-shaped. Anyway, so let's have a look. So apparently they made some guidance. What was it? August 2000. What was it again? 21st of August 2019. So here we are. 21st of August 2019. On this particular day, share price rose 11%. Share price was in a nice uptrend. And then on the 19th of February, share price dropped 27% on that day, fell all the way down to a low of about $10 in late March. So they probably sold on this day or days after at about $20, and the current share price of Wisetech is 100. So they've missed out on a 5-bagger because they sold on this particular day. And to be honest with you, I'm not sure if Wisetech is to blame again. And then look at this, share price on the 19th of August rallied 33.9%. Yep, I think they just sold, and they're blaming or trying to blame Wisetech instead of looking in the mirror and saying, what did we do wrong? Why did we sell on that particular day? Anyway, that's just my opinion on this particular class action against Wisetech. It was weird. Why would you be suing Wisetech? What have they done wrong? And absolutely nothing, in my opinion. This is just my opinion. Okay, so let's have a look at the market today. It's had a good day. Everything's up. Resources not up as much as probably you would like. But again, there's going to be some companies that have not performed well. Real estate, really good day. So more than likely, Goodman Group's up a fair bit. IT, so Wisetech, talking about Wisetech, it's probably up a fair bit as well. The only couple of sectors that have not performed well, when I say not performed well, I'm talking about above 0.5%. Utilities and energy, both up 0.43 and 0.29% respectively. Gold's had a good day, up 2.1%. Is any indice down today? I'd say no. Or emerging companies. Again, companies that come in between 350 and 600 on the ASX are down. This doesn't make sense. These would be considered small caps, yet small caps are an absolute tear. And I don't think, yeah, we don't. I think I've done this before. There's no actually companies in this, but I went through some of the companies between 350 and 600 on the ASX by market cap, and yeah, these would be considered small caps. It's really weird what's happening with that particular industry. Not sure. Anyway, and the XTL, which is the ASX 20, up 0.85%. I would probably say maybe 18 companies up, 2 down. Let's have a look. 18 up, 2 down. Yes. Yes, but that wasn't very hard, and I had a pretty good chance hitting that. And maybe the only 2 companies down, I'm going to say Santos and Transurban. No, Transurban's a pretty bad one. Santos and Transurban, I'll go with that. Oh, BHP and Fortescue. 2 iron ore companies. There you go. Transurban is the 6th worst performing company, and Santos is actually done pretty well today. And the best performing company, Wisetech, Macquarie Group, Aristocrat, Goodman Group, and Telstra. Okay, so let's have a look at the best and worst performing companies today. And I have not had a look at this. A lot of times when I actually do this video or record this video, just prior to recording or hitting the record button, I will have a quick look at the top gainers and top losers. I have not done this today, so this is going to be a surprise. In fact, I haven't looked at the market today apart from SKS Technologies because I got a bit of an alert. The share price had dropped a lot, and then I had a look. The share price recovered fairly quickly. So let's have a look at top gainers. So we have a company called Labyrinth Resources, up 200%. 200%, and more than likely there's been some sort of drilling result. No, there you go. They're acquiring something. Set to acquire Vivian Project and 100% of Comet Vale. So this company, what's it called again? It is called Labyrinth, T code LRL. I'm just going to go into ComSec, LRL. And I'm just going to open up this particular announcement. I have no idea what this project is. I never get excited by these projects. Looks like it's gold. This could be a company making acquisition. It could be. Maybe that is why the market is really excited. Vivian, previously owned and operated by Ramelius, will provide Labyrinth a near-term opportunity to find a JORC mineral resource across the Vivian main pit. Delve a little bit deeper into this one for Labyrinth. This could be an interesting announcement. So last thing I want to do is look at the chart, and I'd say this could be, I'm going to say it is a breakout. Very close. This could be a breakout. Share price in a well-defined downtrend. Has been a little bit of selling today, but not a lot. Pretty high volume. This could be a company making an announcement for the company. I don't know. It could be. So that's Labyrinth, up 200% today. Otherwise, a few other companies here up on low turnover. Titomic doing well again, up 25%. A lot of volatility in that company. I might have a look at the chart for that company towards the end of the video. And otherwise, we have a company I am trading, Kitty Resources, up 20%. Always good to see. FBR's had another good day. And there's Step 1 Clothing, the top stock of the day, up 16.44% on the back of a positive trading update. Was it a trading update or preliminary results? Something like that. Yeah, trading update. Yeah, the market likes it, and I think, in fact, I'm going to talk more about Step 1 when we get to it, because it's the number 1 stock of the day, or the top stock of the day. So not surprising to see it on this list. And as we go down the list, nothing else there. Let's have a look by market cap. If it works. It is not working. There we go. Polynovo, another good day. I might have a look at the chart for that one too. AG Metals has a nice bounce after a few bad days. Catabolts had another good day. I'm happy with that. Catalyst Metals, another good day. There's Step 1. Accounts of Resources, nice little bounce. Core Lithium did release their Appendix 5B, but I did note that they have gone into, well, they haven't gone into, we already knew this, they have now really depleted their stockpile or something. So they were cash flow positive, but they are not mining. It's got care and maintenance. Anyway, Actigen has another good day. I'm happy with that. Colsol has had a nice bounce. Avita Medical is now above $3, which is interesting for that company. So quite a few interesting companies on this list. TASME says it's an ETF. It's not an ETF. TASME, TEA ticker code, is a recent listing. It's a recent listing. And when I say recent, I'm thinking 2 or 3 months ago. I have not had a look at this company. And the chart, share price has gone a bit of a tear the last 5 or 6 trading days. So this company listed on the 29th of April. Okay, so let's have a look at the worst performing companies today. Hopefully no companies that I own are on this list. Moshio, which had a good day 2 days ago, down again. Droneshield down another 17% at $1.68. What is happening with Droneshield? Still, yeah, I might have found a base. I will have a look at Droneshield's chart. Otherwise, we have Spector, Sensen. That's okay. It's illiquidly traded, but that company is operating cash flow positive. So share price for Sensen has gone up or went up 50% and 35% in consecutive days. You've got to press on the right thing here. Yeah, it went up 52% and 25% in consecutive days. This company made it into my top 5 stocks of the day. I think it was 2 days ago. I think it came in at number 5. And obviously, there's going to be a little bit of profit taking when the share price rallies like that. And that's exactly what we've seen today. A little bit of profit taking. Share price down to 3.2 cents. What else do we have here? Nothing of note. Let's have a look by market cap. We have Mount Gibson did release their quarterly results today, down 10.47%. Now, Mount Gibson did not make it into my top 5. And I had a look at the results, and I probably could not have guessed that the share price would have been down on these results. So probably Mount Gibson should have made it into my top 5 stocks of the day. We'll just have a quick look at the chart for Mount Gibson. So I'm a little bit surprised by this, but not completely surprised. Share price has been a downtrend, and share price just keeps on falling. Yeah. So today is not a good day for Mount Gibson. Elsewhere, we have some other mining companies here: Metals X, Metro Mining, AIC Mines. Praemium released a bit of a trading update today, down 9.6%. That has made it into my top 5 at number 4. Mitchell Services has made it in my top 5 at number 3, down 8.5%. I think this is a complete overreaction from the market, but that's okay. That company is ridiculously cheap and doing a share buyback. Alcidion release announcement today, down 10.2%. Next Science release announcement today. Synlait release announcement today, and none of these companies made it into my top 5. There you go. Alcidion, I'm a little bit surprised by this one. Their announcement was a long-term partnership signed with Hume Rural Health Alliance. Sounds okay. Doesn't sound negative. If anything, it sounds positive. So let's have a look at the chart for Alcidion. And yeah, I don't know. Maybe because the share price increased 9% yesterday. So this could be just noise. That's what I'm thinking. And the other 2 companies that did release something today, Next Science and Synlait. I'll just briefly go through these. So Next Science, down 8%. They enter into a $5 million unsecured loan facility. That sort of announcement I typically just ignore. But market doesn't like this, although it could be just noise. These sort of companies, when the share price drops 8%, it could be just noise. And you can see here, it's no massive drop in the share price. And the share price has rallied in the past week. And the other one was Synlait Milk. I understand this one. This one is fair enough because Synlait Milk withdrew their guidance, which is not the best thing. And I don't know why anyone would even be thinking about buying shares in this company, to be honest. The chart is one of the worst charts on the ASX. Probably not as bad as Booktopia, but Booktopia is now in administration. I'm not saying this company is going to go into administration. They did have a vote in regards to funding or a loan, and that loan is being approved. But look at this ugly, ugly chart. Possible turnaround story in a few months, maybe even a few years. Okay, so those are the best and the worst of the ASX today. Now let's get to the top 5 stocks of the day. Now some of the companies that did not make it include Synlait Milk, Mount Gibson, Alcidion. A company called Global Health released their Appendix 4C. They are operating cash flow positive. So have a look at that company, Global Health, GLH, and the chart was probably one of the reasons why I decided not to include this company in the top 5. Pretty ugly chart and not much of reaction from the market. Another company that released something interesting today, BHP, released their quarterly activities. I'm assuming probably not much reaction from the market. Yeah, it's almost flat for BHP. And the other one was Immutep. Share price down 1%. They received regulatory clearance for phase 1 trial. And obviously that sort of announcement doesn't really, doesn't really attract the attention of the market. That's another reason why I go through announcements, because I'm trying to find patterns. What sort of announcements attract the market? What sort of announcements the market ignores? So there's one for you. The market doesn't really care about regulatory clearances for phase 1 trials, which is sort of understandable. It's one step in a long line of steps for Immutep. Let's have a quick look at the chart for Immutep. Actually, we'll have a look at the chart for Immutep and also BHP, but Immutep is all over the place. Yeah, that's right. All over the place, highly volatile. And BHP is towards the bottom of a trading range, I think. Yeah, let's have a look at the weekly chart. Yeah, towards the bottom of the trading range. If it falls below $40, that would be concerning. And you could buy now at $43, and the top of the trading range is about 50. And eventually, I do believe eventually BHP their share price will get above 50. Eventually, I'm not sure when it's going to be. Could be tomorrow. It could be a week from now, a month, 6 months, 1 year, 2 years, 6 years. I don't know. Just like CSL, eventually we'll get to all-time highs. And the reason I'm confident about that is BHP, biggest mining company in the world, and I'm confident that over time BHP will grow. That's the weekly chart for BHP going all the way back to 1994. It has gone up, but not in a straight line. The best time to have invested in this company was between 1999 and 2007. All right, so those are companies that did not make it into my top 5 stocks of the day. So let's start off with number 5. And this is a company that released their Appendix 4C after I went away. The company is called Wrkr. WRKR, ticker WRK. Quarterly activity report and Appendix 4C at 11:09 a.m. So I did actually have a look at this just before I started recording, and just based off this particular announcement and their cash flow, their receipts, cash flow, I decided to include this company at number 5 in the place of Global Health. Sorry, Global Health, you have been usurped by Wrkr just because they released their Appendix 4C a little bit later than you, and the chart looks a little bit better. Almost identical in terms of operating cash flow. So let's open up this Appendix 4C. And also, I'll show you my literal cash receipts graph for this company. However, they did include a nice little table here, or graph, what do you want to call it? So this company is, what does this company do? Let's have a look. I think I've done maybe 1 or 2 videos on this company in the past. Let's have a look. There, I've done 2 videos, one standalone, February 19, 2023, and then I combined the video with Hydrix, July 14, 2022. So I can't quite remember what this company does because it's quite a while ago since I actually had a look at Wrkr, but I'm going to just kick myself here. Is an Australian financial technology company founded and listed on the ASX in 2016. Wait, founded and listed on the founded? How can a company be founded on the ASX? Is that just bad wording, or is that real? Founded and listed on the ASX. Founded. I think they made founded in 2016 and listed on the ASX in 2016. They weren't founded and listed on the ASX in 2016. I think it's separately. They were founded and then listed on the ASX. Okay. This company provides compliance and payment software solutions to create efficiencies for super funds, payroll service providers, and both large and small Australian employers. They have 3 core offerings: Wrkr Platform, Wrkr Pay, and Wrkr ready. Now, the most important thing about this is this. So we not only have quarter of history, we also have year. So we actually see how these companies have performed in the past year. This company operating cash flow positive, $326,000 in the quarter, $340,000 in the year. So they are operating cash flow positive for the quarter and for the year, more than likely because of this particular quarter. If you look at the other 3 quarters, only operating cash flow positive by $14,000. The next thing I like to do is look at property, plant, and equipment. This company is quite capital light, $5,000 spent on capex. They did spend $493,000 on investments, but this company is also free cash flow positive for the quarter and for the year. Do they have any debt? Probably the next thing I want to look at is just cash on hand. It's up to, because of that investments, it's down to 1.937 million. Do they have any debt? That's the most important thing. Financing facilities, 3.3 million. So they do have a little bit of debt here, just a little bit. The other thing I like in the section 7 is you can see the particulars of the debt. So for instance, this company has a loan facility. Looks like they have 2 loan facilities. One with iCumulate Praemium funding, flat interest rate of 5.6283%. They also have a convertible note. Face value of each convertible note is $1 per convertible note. Maturity date 4th of October 2024. Interest rate 10% per annum, paid as cash on a quarterly basis. Let's have a look at the interest. Interest and other costs of finance paid $80,000. So they're able to fund that interest through their operations. That's really good news. So the last thing I was going to say, I was going to look at Section 8, but they wouldn't have nothing in Section 8. It's not applicable because they were cash flow positive. So the other thing I want to look at is, does this company, in fact, I didn't have to do this because they did it for me. So this is the company's, I'll just expand it for you, This is the company's cash receipts history going back to 2020. So this company listed in 2016, and I started following this company in late 2019, early 2020. And look at that, receipts have gone up. This is a beautiful graph of increasing receipts, exactly what I want to see. The last 2 quarters of receipts up to 2.8 and $2.9 million respectively. So this company is moving in the right direction, and they actually, in fact, they included this at the top of the commentary bit. They included the operating cash flow, payments for operating expenses, and receipts from customers. There it is. They show that all in the one graph, which I don't do. I just have receipts. The reason I just look at receipts is because I want to see receipts growing, and then I look at the operating cash flow. If a company is not growing their receipts and they are operating cash flow, I don't really care. I want to see receipts growing through time, and Wrkr fits all that. So let's have a look at the chart for this company. Now, before that, what is the market cap of Wrkr? 39 million. So it's not awfully cheap. If this company was or had a market cap below $10 million, I'd be like, interesting. So this is a weekly chart. There he is. It goes all the way back to 2016. Share price of this company was above 10 cents briefly when it listed, fell all the way down to a share price of 0.3 cents in April 2020. So it's been a 10-bagger since then. And if you just look at the weekly chart, share price is in a weekly uptrend. So let's have a look at the daily chart. Little pullback, but the chart looks okay. I'd say this company is illiquidly traded, but that can be okay. Only 2 trades today, so definitely illiquidly traded. Only 2 trades today. There are quite a few buyers and sellers. 23 buyers, 31 sellers. So, I mean, if this company keeps hitting it out the park, if they become more and more operating cash flow positive and free cash flow positive, profitable, the liquidity will improve as fund managers become interested in the company. That's exactly what you want to see. And if that happens, the share price won't be 3.1 cents. The share price will be more like 10 cents or 15 cents by that point when the liquidity really improves. That's one of the benefits of being a retail investor. You can buy these sort of companies at a much lower valuation before the fund managers get interested. There might be one or two fund managers interested, but I doubt that. And you can tell if there's any fund managers in it. I would just go to ticker. Ticker sometimes does have, you can see some interesting stuff in ticker. Wrkr, although not here because Wrkr is not in this. Oh, there it is. If you go to ownership, it will tell you who owns the company. So Trent Lund, I'm assuming this is the founder, maybe the CEO. GJB Consulting, they both own 20.4%. Starmay Superannuation, Clinton Capital Partners, 4.7%. So that could be a fund manager. It says venture capital. Let's see if they own anything else. The other thing is you can click on these funds. No, they just own Wrkr. What did I do that for? Just want to go back. And in fact, I'm going to increase that to 16. And otherwise, we just have individual investors, corporations. So I can't see any significant fund managers within this company. So Trent Lund, I'm assuming that's the CEO or founder of this company, maybe CEO and founder of this company. Okay, so that's coming in number 5. We have Wrkr. Coming in number 4, we have Praemium. I was interested in this company. Share price down, 5%, no, 9.62% today. They did release their quarterly update, also a presentation. It didn't seem that bad. I had a quick look at it and I went, oh, it seems okay. So funds under administration up 30% to 57.4 billion. Platform funds under administration up 26% to 28.1 billion. If I had to guess maybe why the share price is down, it could be there's this thing called Power Wrap. Funds under administration there up only 1 billion. One View funds under administration there is down 1 billion or 100 million since the 15th of April. Net outflows of 414. That could be another reason why the share price is down. So quarterly net outflows. And most of that seems like it's in Power Wrap. Quarterly net outflows there of 437 million. What does the CEO say? So CEO is Anthony Wamsteker. The June quarter showed a continuation of the positive impact to SMA of improved cross-selling from our non-custodial VMA and VMAAS. Most of that went over my head. I just want to see if they said any negative here. Okay. Well, they do mention Power Wraps, non-systematic outflows associated with transitioning advisors have continued to have adverse impact. So I'd say that's probably why the share price is down because of that. But I think this could be a little bit of no reaction from the market, just possibly, but I'll wait and see. Now, the reason I'm interested in this company is just because of the chart. So there is the chart. There was a bit of a breakout here, and I was thinking, oh, this could be going up. So today has put a little bit of break on that, but not willing to sell just yet. I'm only down less than 10%. So I have seen share prices rebound after a day like this, but I think the potential uptrend in Praemium share price has probably come to an end. This company is also a takeover potential company, a company that could be taken over in the future. Anyway, so that's Praemium coming in at number 4. I had a quick look at it. It didn't seem all that negative. There was a few negative things in there, but overall, I thought it was okay. Definitely not down 10% worthy. That's just my opinion. Maybe I'm a little bit, little bit biased. So that's coming in number 4. We have Praemium. Number 3, we have Mitchell Services. Another, I think, overreaction from the market. Share price down 8.5%. They did release an investor update. Now, there were some negative things about this particular update, particularly if you compare it to the corresponding period last year. But the corresponding period last year, as I said, was an unusual quarter. So everything was down on the previous corresponding period. Even if you look at the year, financial year 24 to financial year 23, there were a few down things here. So this is a driller. Operating rigs, number of shifts, revenue, EBITDA, all down. But they're more efficient. So analyze return on invested capital up from 12.3 to 16.5. Operating cash flow from 35.6 million to 43 million. Operating cash conversion from 86% to 106%. Analyze revenue per rig up 4.1%. So there was a few negative things, a few positive things. But the main things about this company is they're looking really cheap. And I say really cheap. So EBITDA of $40 million. This company has a market cap of about $90 million. So the company is currently trading on 2 times EBITDA. Now, this could have been understandable if they had debt. Now, they did have a bit of debt, but somewhere here, okay. The operating cash performance in the fourth quarter was strong again, 9.4 million. And this has had another impact on net debt, as outlined later in the capital management section. So let's have a look at the capital management section. Capital expenditure, 17 million, which is okay. They're making enough cash for that. Strong operating cash flows. Net debt at 30th of June 2024 was 1.9 million. So technically no debt, which represents a decrease of approximately 75%, 7.6 million 1 year ago, or just over 1 year ago, and 89% decrease since 30th of June 2023, which was 17.6 billion. That should be what they're focusing on. 17.6 million 1 year ago, now it's 1.9 million. Not only that, they're doing a share buyback, and I'm pretty sure they give shareholders a dividend, and they do talk about capital allocation. I do like this company, and I do think this company is cheap. And there is a better signal when a company is cheap and the share price moves into an uptrend. That uptrend can last a long time, particularly if the company keeps hitting the performance out the park. So I have taken position in this company at 40.5 cents. Share price has pulled back today. The other thing I noticed about this company is the share price has been quite volatile at the last, we'll say 4 or 5 months. Before that, it wasn't that volatile. You can see intraday trading wasn't that much. But since then, we've seen massive increases and decreases in share price. So intraday trading or intraday decreases, increases in the share price have been quite extreme since April. But today is not an end to the uptrend at 43 cents. High volume coming in today. But I just think this is a bit of no reaction from the market because the company is cheap. In fact, if it's down 8%, maybe the market cap is about 85 million. Let's have a look. No, it's still 92 million. But I still think it's cheap. It's cheap. But I've always thought this company is cheap. That's the other thing I should mention. I've always thought this company is cheap. And if you have a look at the weekly chart, share price was in a downtrend. All this time, I thought this company was cheap. But again, if you look at the weekly chart, it's turning around. On the weekly chart, it's turning around. Sentiment and the trend is turning from negative to positive. So that's coming in number 3. We have Mitchell Services. Coming in number 2, Zip. No trading today, Zip. Indicated price is down 1.25%. Now, this company went into trading halt first, and the trading halt was for a capital raising. Where is it? There it is. Expects to make an announcement in ASX in connection with a capital raising. And then 17 minutes later, the company released their activity report, which is interesting timing. And the placement, I'll talk about the placement as well. In fact, I'll talk about the placement first. It's done at was it 5% discount to share price? $1.52, yeah, 5.3% discount to the last traded price. So $1.52, raising, what was it, about $217 million, strengthens the company's balance sheet, resets the capital structure, and provides additional flexibility and liquidity to pursue further growth. Now, I did like the trading update from the company. Well, a few things about the company. I would prefer, now they do mention cash EBITDA without the I. So they totally ignore interest, which I'm not sure is a good thing because interest is a real cost for this company. But obviously they want the numbers to be better, so they get rid of or exclude interest. So EBITDA, and that was pretty good for this particular quarter. For the quarter, expect to be in the range of $22 to $25 million, and for financial year up to or between $67 and $70 million. But again, interest is a real cost for this company. Things I like about this particular update include how they're performing in the Americas. Maybe not so much in Australia and New Zealand, but Americas, this company is performing quite well, particularly if you compare previous corresponding period. So revenue in the Americas up 46.8%. Compared to ANZ, only up 1.8%. Transaction volume up 42.6%. Transaction numbers up 38.9%. Active customers down 1.4%. But those people who are using it more often. Now, if you see the active customers actually improve, that would be and could be a good sign. And merchants up 9.6%. That's overall. And in America is up 0.7%. Funny enough, in Australia and New Zealand, up 14.1%. Net bad debts, 1.44%, down from 1.272% in the third quarter. So it actually, I didn't mind this particular update from Zip, but going to a trading halt for a capital raising, and I'm not sure if that's an absolutely good thing. I think the market might have reacted quite well to this particular announcement. Yeah, which is interesting because if the market reacted well to this announcement, the share price could have popped up to say $2, and that's when they do the capital raising. But maybe the market was a little bit wary and they thought the share price might drop on this announcement. So they were just playing the odds here. And I thought they'd probably think raising $1.52 is probably good enough. So it's interesting timing. Buy Zip to do the capital raising on the same day they release the activity report. So that's coming in number 2. We have Zip. And before I forget, let's have a look at the chart for Zip. And we have seen a bit of a pullback in the share price of Zip in the last few days. And it's moved into my little purple box, which is buy zone. So that's a buy zone. It's moved into this buy zone. So share price did rally all the way up to almost $1.83 as a high. Nice little pullback. So I was waiting for the pullback for a potential trade. And so this could be a potential trade. I would assume that the share price will stay above $1.50 even after this capital raising. So Zip still moving in the right direction. And coming in at number 1, we have Step 1 Clothing. Up 19.2% on a trading update. And I think this trading update was pretty good. And the market thinks it's pretty good as well. So they're talking about their financial year 24 revenue and EBITDA. So no profit. I do prefer profit, even cash flow. But you could assume EBITDA is almost identical to cash flow, not quite. So revenue of 84 million, up 29% from last year. EBITDA up to 17 million, 42% increase from last year. The second half results were okay. I actually did have a look at the half-year results and then had a look at this particular announcement. So a decrease in revenue in the second half compared to the first half in EBITDA, but that's to be expected because I would say more people are buying underwear or innerwear, whatever you want to call it these days, in the first half than the second half. But these were good numbers. EBITDA of 17 million. Now the share price and the valuation of Step 1 was it 250 million? 318 million. That probably does make me a little bit, this company's not that cheap. So $17 million EBITDA. So the company is trading on nearly 20 times, we'll say 18 or 19 times EBITDA. So this company is not trading cheaply right now. That's probably my one little bit of wariness about this company is it's not cheap. Not when I first bought it. So for those who don't follow me all that closely, I took a position in Step 1 at 57 cents, 53 cents, back in August 2023. So we're not even talking about 1 year ago. The share price of this company broke out, was quite an obvious breakout, on the 22nd of August when they released their results. And I bought a few days later at 53 cents. I then sold at about $1.50. So was it $1.50? It was something, yeah, between $1.50 and $1.60. I did not sell completely. I maintained, I think I sold 2/3 and I maintained a 1/3 position. And this could be considered a breakout, possibly. But again, I want to include looking at valuation of company before I make a decision whether or not I trade a company. And with Step 1, I'm not sure the valuation is there. If the share price was 53 cents on the back of this particular announcement, I would be all in with Step 1. But I want to look for valuation because if I see a cheap company release a really good announcement like this, I'm all in. Maybe not all in, but yeah, I'm there for the ride because that's when you're going to see or have the potential to see a significant re-rating in the share price. Sort of similar to sort of like we're seeing with integrated research right now. Anyway, so congratulations to those shareholders who have maintained a big position in this company. I think like Liam Jones, Step 1 is back. It is back, yes, Step 1. Well, I'm not sure it's back. It never went away. But I think this is confirmation that nothing bad is happening to the company. It's probably the best way to say it. All right, so let's have a look at a few charts. The first one is SKS Technologies. I've been following the trading of this company today. Really interesting trading. And this is the case, a perfect example of don't lose your mind when you see the share price drop. Sometimes maybe you should, but this is the case when you should. This was a really good instance of people panicking when they see the share price drop. So SKS Technologies is down 1.88%. So he's probably saying, what am I talking about? It's only down 1.88%. Share price opened $1.60. That was a high for the day. It fell from $1.60 to $1.35. And that's risen again, all the way back up to $1.56. So let's have a look at the chart. And you probably can see that just on the one-day candlestick. This is actually a really bullish one-day candlestick. That means there's a lot of buying down as low as $1.35. Now I bought $1.30, so I wasn't going to add to my position. This is a case where if I see the share price drop like this, and I have the confidence, the conviction, I will add to my position. But because I just recently added $1.30, I thought, no, it's no point. And let's have a look at the 5-minute chart. Nothing to note. The volume today has been quite light. So 406,000 shares traded. The last 3 days, we've seen 3.7 million, 860,000, 503,000. So volume has been dropping. So this decrease in share price in the morning of what day is today? 17th, has been or had been on light volume. That is a telltale sign that there's not going to be a rush to the door to sell out. And typically when that happens, when there's not a rush, then you see the buyers coming in, and those buyers have come in on force today. So if you have a look at the 5-minute chart, you can see within the first hour, in fact, the share price reached its low at 11.20. So it was in the first hour and a half, there was a consistent selling, but not very big volume. Then there was a peak in volume at 11.20. And that's when the share price reached its low, $1.36. And since then, there's been no selling. Selling has completely dried up. Not completely, but you know what I mean. And the share price is, going back up to where it started the day. So probably the key to this is don't panic on days like this. There's no need to panic. Now, saying that, should have you panicked? Those who did panic for Droneshield are probably having a good time, because those who saw the share price drop a lot yesterday, maybe they got out at 2:30, and if they're listening to me now, they'll be saying, well, this is what happens when you do panic. You sell out at a much higher price when the share price is right now. So share price of Droneshield has dropped again, almost 20%. So 2 big down days in a row on huge volume. In fact, the volume today has been larger than it was yesterday. Now, I would think if you look at the 5-minute chart, we've almost found a base. I'm not sure if I'm going to call it just yet. Is the share price into $70s? Yep. I think there is potential to say the share price has found a bit of a base. Now, it's going to be very important to see how the share price performs in the next, I'd say, day or so. The other thing to notice, the volume has really dried up. So the big volume really started to decrease. The second to last low, so that was about 11 a.m. And then there's a little bit of peak in volume at the low at 12:30, and the volume has just dried up. That's probably a good sign that the volume has been reaching, but share price is rallying and we're not seeing big volume coming in. So that is possibly a sign that the buyers just aren't there yet. The buyers might be just holding back to see if the sellers are there's more sellers out there trying to offload their shares. So I do have a small position in Droneshield. I sold out at about here, about 3:30 p.m. on Monday. I sold out there at 2.60 cents. It was like 2.57 cents. I didn't sell it completely. I sold out 2/3 of my holding. Yeah. And at this point, I have no intention of selling my other third, because I think this company can go on another run. I just don't know when. I'm more likely to add more to my position. So that's Droneshield. Another one was Titomic. TTT. That's a 5-minute chart. So the daily chart, that looks pretty good, doesn't it? This is a nice little chart for Titomic, up almost 20% today. Market cap is 121 million. Now, in saying that, I don't think this company has much of a business. I think this company might be more of a story stock. They did do a nice announcement. Dr. Patricia dared to head US defense and aerospace efforts. Let's just have a look at the most recent Appendix 4C. And I would assume this company has oh, no, that's right. This company has okay receipts, 2.2 million, and was almost operating cash flow positive if you include government grants and tax incentives. So I'm assuming their cash receipts in this particular quarter are going to be quite strong. They probably want to be because the share price has risen a fair bit since March, hasn't it? Anyway, so a nice little chart here for Titomic. And the last charts I want to show you is PolyNovo. Just because the share price up a fair bit today. And this is actually another nice looking chart, isn't it? Market cap of this company is 1.6 billion, so there is a lot of promise already priced into this company. But I actually do like this company, and I'm not sure why I have not taken a trading position in PolyNovo just yet, because the chart looks pretty good. Nice breakout. I wouldn't say today's a breakout, but it has reached a new high. PolyNovo looks pretty good. Really good volume coming in today as well. Okay. Just wanted to go through a few comments. So Liam Jones says step one is back. Okay. No, I'm not going to talk about any now. I'm not going to talk about any of this. Jason Immo has been releasing some quite a few good comments in regards to patterns and one-day candlesticks, what they're called, that sort of thing. Anyway, that's all I'm going to have for today's video. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.